To the tape, judgment time for stocks. That critical CPI report dropping in the morning just as earnings season gets hot and heavy. So what are investors to do? Let's ask Trivariate's Adam Parker. He's here with me at the New York Stock Exchange. Good to see you, as always.
Good to see you.
You show up, stocks sell off. It wasn't the greatest close.
No.
Are we trying to get ahead of the CPI?
Yeah, I think so. There was a rumor out that it even had leaked, I think. So,
well, there was a rumor out that there was a fake CPI report out, which we're trying to get some more reporting on. But since you mentioned it, I might as well bring it to light of what some people are talking about on the street.
Yeah, that's a rumor. I think some of the firms were blasting it out like it was a rumor. Look, I just think that there's math, right? 1/3 of the CPI is owner's equivalent rent, and rents are rising like crazy. No matter who you know who's in the real estate business, they'll tell you it's 1% a month, still. So that's 12% per year times a third. That's huge upward pressure on the CPI. So the debate you and I have had, everyone's had the last 6 months, is like, how will the Fed react to the high CPI? Are they going to, realize that they can't get to the 2% bogey in a 12-month time frame and go quick, slowly, or are they going to try to get there quickly? And it's all a timing issue. I've thought they would kind of recognize they can't get there in 1 year and tread lightly. But,
let me pose this to you and get your reaction to it.
Yeah.
It feels to me like we got a battle going on, okay, between where we are, high inflation, rate hikes, earnings estimates too high, economy weakening, versus where we may go. Falling inflation, less hawkish Fed, earnings not as bad as feared, and soft landing. Is that fair?
I think that's right. And the multiple's down 5 turns since January 1st, from 21 and change to 16 plus or minus. So some of it's in the price, but we all study the stocks every day. Find me a company that guided down a ton and then rallied a lot on that news. You've seen some go down that day and then recover a little. But I still don't believe that you could say a recession is in the price. That makes me a little bit nervous because I know the numbers are way too high.
Do you want to focus on what I said is the here and now, or are you more focused on what may be?
I think it's 2/3 what may be, 1/3 now. So I think we're more than halfway through the pain, but I still haven't seen that signal you sometimes get in cyclicals where they miss and the stock goes up because people say that's the end of the bad news. We haven't even got the beginning of the bad news yet. So I think it's a little early to be super excited about being anticipatory. I think the CPI print will be high. I have no idea how the Fed will interpret it because, look, I don't know how they were buying billions of dollars of MBS when the housing market was on fire. So I've been wrong about trying to interpret what the heck they're going to do. I just think it's easy math. You can do the math. The CPI is going to be high because of rent, and we all know that if you're a new home buyer, we're in the worst part of the 2x2 grid, right? The 2x2 grid of high home prices, low home prices, high borrowing costs, low borrowing costs. We're in the wrong quadrant, high borrowing costs and high prices. So something's got to give. So people are renting, and that's actually exacerbating the CPI. It's not helping even as the economy slows.
It's going to be high, but what if it's not as high as feared? What does that mean for stocks?
I think if you really know that the second derivative CPI is negative, the market's going to scream higher. But I don't think people really want to get in front of that, knowing the math of upward pressure from the CPI and the rent. So we're all trying to say, oh, this is deflating or that's deflating. Used car pricing, people are going to get repo. Like, everyone's looking for the deflationary data. But 1/3 of the CPI is getting continuously pressed higher. Let's say tomorrow we do some checks, we find out rents are stable for the first month. That's 12 times 12% grow, 1/12 times 0. It's just going to take a long time to roll off. It's probably 12 months minimum elevated, so we can't get the 2% CPI for a long time. And I think it's all about communication around that.
One of your headlines is that you're expecting material downward earnings revisions. To me, that feels like you're capitulating finally on what you think are going to happen with earnings, right? I mean, you were maybe more positive than most for the past few times that we've spoken. No,
I mean, look, I think that we just think that the estimates are too high, and I don't think they're going to be negative this year. Again, I think what we're trying to say, and maybe this is what you're talking about, is that we still think earnings will grow year over year. That's a function of the shape, right? You grow this much, and then you start to flatten. You still grow, beginning to end. I think you'll get mid-single-digit earnings growth. What's in the consensus numbers, though, is 10% for this year and another 9.5%, 10% next year.
That's too high.
That's insane. So I think what people are debating is the S&P official numbers are, I think, $250 in earnings. We're at $38.18 at the close. So people are saying, is it 250 or is it 210, 200? Where as it's declining, am I going to have an idea when it's plateauing or not? So I think that's why you have to always position, with some offense and some defense in the portfolio.